Good morning, everyone. My name is Josip Kasik. Welcome to Options with Options. If you can do me a favor, in a chat box, you can type in that sound check is good. Then we can start. And as always, we're going to start with the disclaimers. So please take a moment to read the disclaimers. We're not financial advisors. All the examples are for educational purposes only. And if you need to get in touch with me, email is provided down here. And we have an agenda that we're going to look at the current market environment. Then we're going to talk about some new trades. And at the end, we're going to maybe even review one of the existing trades that we have. So once again, market is significantly up this morning. I'm going to actually bring the Finviz here, so you would see the three markets that are being shown here: Dow, Nasdaq, and S&P are straight up, almost like a 90-degree angle. And what I'm going to do now is just go over the quick review, what the big picture is, and we're going to place the bull puts below this morning lows. That's the actually goal that I want to do this morning. I'll try to put maybe 3 or 4 of them within a session that we have. So why do I want to put the bull puts in on the bear call? Because we are lifting here quite significantly after we've been down for one single day. We had 4 days of basically chopping here on the daily on S&P, and today we're back in the range, possibly maybe even taking out this consolidation area and going high. So it's really interesting how market has all this negative news out there, but it's still ready to go up on the fumes, basically on nothing that is supporting it. So we've been down for a number of sessions. Now we are ready to move above the exponential moving average. Whether we're going to use the calls and puts, in this case, it's about the same. And if I now go over here just quickly to show you the chart that I usually show on the 3 major markets, the situation is quite interesting because we are now looking here. If I can just switch to here on the daily, on a Dow, the fact that we are just about ready to go higher, and on a SPY is pretty much the similar thing. We were going sideways for a period of time here in this area, and we're now back in the range after we spent 1 day down. Good morning, Christian. Good morning, Mark. Good morning, everyone. I'm glad to hear that the sound is good. And what I'm planning to do right here, I'm going to be placing the bull put spread right below this area. So when I look at chart here of S&P on a daily, I'm seeing that level over here is low, and we're gonna now pull up the chain, and we're not gonna do the long call, we're gonna do the bull put. And bull put spread is going to be for the cycle that is expiring on 22nd. On the 22nd, and we're going to be looking here. It shows what is a high and what is a low on the SPY. We're going to be looking at 437 and 438. So 437 and 438. So we're going to be buying the 437. We're going to be selling the 438. And when I price this, we're going to be getting a credit of the 24 cents. So just now take a quick snapshot of this, because I want to really spend this morning executing these trades rather than anything else. So I'm going to be putting this in here. So this is for a SPY, and we're gonna later on have other ones. So what I'm planning to do right now is right away jump in a thinkorswim, pull up the SPY, go into the April 22nd, which is a 3 days out, add more strike prices below, 437, 438. These are out of the money. Liquidity looks excellent as of this morning. This is a liquidity as of this morning. So these two strike prices are the one that I'm entertaining, and the one just below it is a 439. So if I now revisit one more time chart before I fire this trade in, because I want to make sure that we are clear on why I'm doing what I'm doing. We are at the 443.41. So 443.41 is the current price. And when I look at lower strike prices, 442 would be out of the money, 441 would be out of the money, and we are going down all the way to the 438, which is the one that we're going to be selling to open, which is way out of the money. And then of course we need to have a protection, and protection is lower one, 437.50, right? So now when I revisit the chart and I draw the line on the chart here, let me just float this for a second and move it out of the way and go back to my regular chart, which is options with options. You would see how that 439 actually makes a lot of sense on SPY this morning. So this is a 55 minutes. I'm going to switch it then to the daily. Okay, and we're looking right here at 438. This would be my area where I'm anticipating that by Friday price is not going to come down. If the price comes down there, then we need to manage it, and I'm going to designate the part of this for management. Would I do this normally on a SPX? Mark, this is a great question. Why don't I do this? I'm going to fire this first on a SPY, and I'm going to fire it on SPX, and they will have them side by side. It's a very good question. Good morning, Ahmed. And then I'll work on a management, because I noticed, Mark, you posted a question there, but I want to reserve that after I do these executions, right? So one more time, I like to place this trade right now. So when I go to the thinkorswim platform, I have ability to change this by clicking the sell vertical, and it's showing me the 23 cents. I just need to make sure that I bring it down to what we agreed, which is just one contract. And now I'm going to be asking for 23. So now when I send it in, I got fill at 23. So now that I have that information, I can actually record this and then right away work on my trade for SPX. So SPX is 10 times bigger than the SPY, and we are going to get different amount of credits for that particular trade, because obviously that would be a different beast. So over here we have information 165, 142. At the time when I captured it, it was saying a little bit different, but of course market is a breathing thing, so it's constantly changing, right? It's constantly changing. So let's now have that side by side with the S&P 500. And the way how I'm planning to do this, right here, I'm gonna create a table, and one is gonna be for the S&P, and other one is gonna be for SPY. So this is my information for a SPY. Here's gonna be my information for the SPX. And just before I do anything else, I want to make sure that I put these two pieces of information in, so we have that side by side. So of course I'm going to be selling to open, and then in order to do that I need to be also buying to open the lower one. buying to open lower one, right? So if this is sitting right now at 443.31, S&P is most likely at this level, and I'm gonna bring this FinViz to make sure that I'm correct. 4443 is where the current price is, 4443. So it's a little bit off. And then we're gonna be looking here 4380, and if possible we might do the 4375, right? If those numbers match, so going here to the SPX. Okay, so okay, now since I typed this number where the current price is, it has changed to 446 because obviously the market is very, very bullish. So we are now almost like 60 points away from where I want to put the line in the sand and sell this unit, right? Good morning, Jeff. Good to see you here. So what I'm doing right now, I'm pointing out to you that I'm in April 22nd. It has 3 days of expiration. These are the intrinsic values right here on the put side because we're working with the put side. And I would obviously need to add more strike prices to see that level that I like, which is a 438. Now, 438 as of this morning has traded only 257 contracts, and 437.50 has traded 338, right? So in this particular case, the low was a 4,390 over here if you look at it low. So what I want to really do, place the trade below the low. So now I'm thinking, maybe I can even move this a little bit higher and entertain the strike prices that concern 43.85, 43.80 versus me considering doing this one in green that I originally typed in 438.75. So let's just price both of them side by side and then we'll decide. And of course, we'll always have to go back to the chart to confirm it. Always go back to the chart and confirm it. So my original trade is the one that is in a green rectangle, and I'm going to price that just to kind of get the information how much of the credit I'm getting for that. So I'm getting $1.10. So I would be getting $1.10 if I were about to do this particular one, right? So if I do this particular one, I'm supposed to get the credit of the $1.10. Now, if I just alter the strike prices, and I'm gonna add one more box here just to kind of point out to you, if I decide to take a little bit more heat and to do the higher up by a little bit, then I will be selling the lower one, and it's $5 increment. Maybe I can do one more thing here just to kind of not confuse anybody, but to emphasize that low of the day today was the 43.90. So what would need to happen for us to be wrong, because this is the one thing that I'm really concerned about, and I want to make sure that you understand, is where do you exit if you are wrong with this particular trade? So you would exit if this entire move up has been negated. If this entire move up has been negated. So as of now, market has been going up virtually 90 degrees up. So if we come down and take out that 43.90, then we would be obviously wrong. Now, I don't think that's going to happen today, because really what most likely is going to happen on the bigger picture, that we might try to go higher again over the next several sessions, Wednesday, Thursday, Friday. So as of now, from where I am, I was thinking to add additional $10 buffer over here. In this case, let me add one more below. So this one is 10 points additional protection for my 43.80 Okay, but if I wanna do the 43.85, then my protection is only additional protection is only 5 points. Okay, now be aware of it, that because what I'm doing here is moving it closer to the price, I will get the richer premium. So it's going to be more than $1.30. Well, now it's already changing this, So let's price this one. So if you're selling vertical, so this, well, okay, let's start from the beginning, because the prices have changed since I last time entered the information. This originally was sitting at $1.10. Now it's at the 95 cents. This right now, it's giving me $1.05. So let's deal with those numbers. Let's deal with these numbers, okay? So never mind what it was when I clicked it. Now it's at the 95, and this one right here, this spread I'm emphasizing, the spread is basically giving me $1.05. So I'm going to give you a couple of minutes in a chat box to answer the question: do you prefer to do the, and I'm just going to just use the leg that I'm selling, 43.80 put or 43.85 put. Now be aware of it that 43.85 put gives more credit. Over here, this gives a less credit but more protection. This one gives you more credit, but only that additional 5 point of the low protection. So take a moment to type it. I know it's a little bit of delay. I'm going to sip of water here if you don't mind, because once when we decide, then I'm going to fire the trade in, and we're going to then compare it to the other trade. So we have two choices. We have a 435, 4385. That's a choice. And then we also have a choice of the 4380, which is, in my opinion, a little bit more conservative. More protection. Very good, Jeff. Thank you. So the one that is a more protection is this one that I just highlighted in let's maybe even change color. It doesn't matter. Let's just fire the trade in. Mark says a Goon UFO starts at 4370. So get full protection for the UFOs. One would need to go even now to 4370. Okay. In my experience, then I would be getting only 50 cents while I'm risking the $5. Now we can do that, and we're going to look at that and evaluate, right? So be aware of it that if I now go over here and let's now type in the SPX, and I look at the UFOs, this is what the Mark was talking about. If I would put my unit right here at 4370, if I would put it right here, my unit at 4370, right? 4370 put, right? We would be really, in that case, 30 points plus we're now at 45. That's about 75 points away from it. The question is, are we going to be able to get the 50 cents for it? Right now, 50 cents on a $5 risk, that's about 10%. But then if that's going to make you sleep at peace, maybe we can fire multiple trades like that. So let me now point out to you side by side. I'm going to point out to you. So just escape this, bring in the Thinkorswim, and discuss the possibilities. In this case, this one is the one that the Mark was addressing. If I sell the 43.70, I need to buy 43.65. So when I click over here, if it's anything bigger than the 50 cents, I will be more than willing to take it. Well, of course, the price since then has changed. This is the one thing that is kind of tricky when we are teaching and the market is open. It's constantly live. So here's just a snapshot. Initially, when I looked at it, the price was at 4447. Now, if I update this, it's gonna say 4445. That means that $2 pullback has altered the pricing of these premiums. So originally, when I wrote 95 cents for 43.80, has changed now to a full dollar. This one that Mark suggests is 90 cents. The one that is even more aggressive, I would call it aggressive because it has an additional 5 points off this low, 5 points of this low. So this is my most important piece of information that I want you to be aware of it, that you're looking where the low is and you're saying to yourself, okay, if I pick this one, that is 43.85, I only giving myself 5 points of protection. But if you're picking the one that Mark suggested, you're giving yourself additional 20. So we actually have three choices here to choose from. Three choices to choose from. So which one are we going to choose? Well, I am going to execute the one for 43.80 in order to be solid, to have it fixed. And I'm memorizing the number. It's 44.48 right now, the current price when I'm firing this trade in. I'm not going to do it to 10 contracts. I'm going to slow down and I'm going to fire it with the one contract. So this is a nice trade. I'm risking $400 to make a one. Send it in. Got filled for $1. Without waiting, I will now do the one that Mark prefers because it's below the UFOs. It's more conservative, and it's now giving me 80 cents. It's giving me 80 cents. Okay, let's try for 90 cents. Let's see if I can get it for 90 cents. Now, be aware of it. What I did, I sent 10 of them in, okay, instead of sending one. So one is unlike another. So let me point this out to you. When you go over here where it says the positions, you can clearly distinguish the one that I did, that Mark chose because it's below the UFOs, right? And the one that we did because we wanted to match the SPY, which we just fired in. So I'm gonna copy only the part over here that I have one that matches the SPY that we were able to. Oh, look, both of them we got for one. Well, that's a real anomaly. That's a real anomaly. So let's now copy this and then put it in our Word document. And I'm sticking only to 43.80 because this is the one that we did, right? So this particular one, I want to actually get rid of it. So later on, when I put this in those worksheets that I always refer to for my live session, you will have information. And I will go over this trade at the tail end of it because that trade did not work out. So we are now placing the bull puts below the low. So the low was at 43.90. We have decided to do 43.80 and we were able to get the $1 credit. So that's my maximum profit. What is my loss? Well, when you look at the math behind this, in this case of the SPY, we were risking only $1. Over here, we are risking how much? Well, it's supposed to be $500, but because we got paid $100, really we're risking only $400. $400. Now, what really needs to happen? Well, one more time, what needs to happen that the price by Friday close must stay above this dotted line of 43.90. So as of now, we had a 90-degree move up. We went sideways and there are still buyers coming in. And when you're looking here, this is a sea of green. Everybody's bullish on it, with the exception of this little energy sector, which we know why is the case. So that's the case. Now on my SPY trade, I have gotten only 23 cents. So I have gotten only 23 cents. So that's mean instead of risking the 23 cents, instead of risking $1, I'm risking only the difference of the 77. But my maximum profit is 23 cents, right? So we're risking dollar minus 23, 77, while the maximum profit is 23 cents. Right? So they pretty much are very, very similar trades. But what I was thinking to do now, because I'm having here bull puts, is to revisit the charts of the QQQ, IWM, and perhaps even diamonds, and to do the next 3 trades on those products. Oh, I already have taken the shot here. So the way how I want to now accelerate this and do it is that I'm going to have a diamonds, I'm going to have a QQQ, and I'm going to have a IWM. And it's going to be very, very much similar logic. First, I'm going to have a LOD, low of the day, low of the day, low of the day. So you would understand the steps that I'm going. Christian said, isn't that the risk reward upside down? Well, the easiest way to understand this is when you place one of these trades, you single right click on it and you go where it says a create a duplicate order, and then just don't send it, but read what it's saying here. Your maximum profit is 23 cents. Your maximum loss is 77, right? So how do we get up to those numbers? Because the difference between the 438 and 437 is a 1. That would get multiplied by 100 because this is being quoted per share. So that's mean out of the 100 that they're supposed to take as a margin, they already owe me 23. So then they're holding in the margin only 77, right? So when I go over here and I pull this up on IWM, no, actually on a SPY, they're still showing that they're holding 100. Now, why would they call it here 5,500? Because on the Marks trade, we did it with 10 contracts. On the one that I picked, we did it only with the 1 contract, and the spread difference is 5. So, Christian, if this makes sense, just type in, I got it, move on. So we're good. So one more time, if you want to kind of understand how this whole thing works, you single right click on the one that you executed. You go where it says to create a duplicate order. You don't confirm it, but you take a moment to read this and to understand it. So 4,380 minus 4,375 gives you $500. $500, but they gave you a $100 profit credit up front. That's mean they're holding 500, but really 100 is already something they need to give you back. So you're risking 400, and just observe how many points are you really out of the money in this area where you're trading. Okay, so we have a big area here. I don't know always round numbers, but if I now just get rid of this volume and I ask for intrinsic, you will understand the 0, 0, 0, that's all out of the money, and we are now at the 44.50. We are trading at 44.50, and I'm selling the stuff down here 70 points lower. 70 points lower. So we would need to lose all these 59 points that we are up, plus additional 10 points to be wrong. And on the marks, we have additional 10, and that's why we did the size a little bit bigger. Okay, Christian, that's the same question you had the last time. Like we are going to be putting the stop on it. You keep thinking directional trading 3-to-1, right? This is not necessarily directional trading 3-to-1 when you're risking $1 to make a $3. This is your outlay of the capital that you need to have in order to gain something, right? So this is not a bull call spread that is directional trade. Bull put, this is classical bull that is completely out of the money, and it has an excellent risk to reward. So what you're mixing up here, your possible loss versus investment. These numbers that I have shown to you there, the investment amount. So let's move on here, and I can type in the QQQ here just to get the information on it, where the low of the day is, and where the current price is. So I'm going to have here on my second screen just information that I'm going to be entering it, and in a minute I'm going to be bringing it up and kind of share it with you. So on a QQQ, we're trading at 345, and the low of the day was right here in this area. Let me just make sure that you all see it. And I'm going to round this up to 337. So 337. It's really 336.98, but I'm going to just type this 337. 337. 337. Okay, moving on. IWM. IWM is my next candidate. IWM has a low of, and I'm going to actually type this number as a 197.70. 197.70. 197.70, and we are currently sitting at 201.56. So 201.56. And the last one that I want to look at here is the diamonds. Diamond is currently sitting at, I'm going to just round this up, 348, and over here we're at, and I'm going to get the exact number, 344.25. Okay, so 344.25, and we're rounding this up to 348. So let me now go over what I have here without the confusion. If I'm going to be building anything, this is what I need. I really need this information for my own sake to understand. So now I go over here. I'm selling to open something that is lower than that, 344 put. So most likely, I would then need to buy to open 343 put. Moving on to the next example. If the low of the day is 337, I can actually go just slightly lower than that, 336, and then I would be buying something that is even lower, 335. Over here, if I'm selling to open 197, then I would need to be buying to open 196. So it's this top line that really matters to me. This unit is the one that I really care about. The other one is just a necessary evil. So for me, the way how I look at the option trading, buying is a necessary evil. But without me buying a put, I won't have a ability. I won't have a ability to sell a put. So I'm buying the lower unit, selling the higher unit, buying the lower unit, selling the higher unit, buying a lower unit, selling the higher unit. Now, this is nice in theory, but what you need to understand that you need to look at where are the unfilled orders on the chart. So I need to revisit every one of these and determine if it actually makes sense where to place these orders. So as you would notice, let me just hit the water a little bit. Diamond is the first one we're going to start with. Originally, okay, there it is, diamond. I see 334, 328 as a level, and we are looking at, let me type in the number here that I actually had as a possible trade, was a 344 put. Do we have a problem with this? Yes, this particular thing is not below the UFOs, it's within the possible reach. So if the price action goes, I'm sure that I can get hit on that, and then I would have a loss, and that wouldn't be the good trade. So I'm going to scrap this trade. I'm going to actually say, you know what? I'm glad I looked at 3 different things, so we then know that maybe I don't need to do the diamond, because the chart doesn't support it. Now, of course, the theory, option theory said, oh yeah, you can do this. I can even go one more extreme and price this and see if it makes sense. But then even if it makes sense, if the chart doesn't support this, then it's better for us not to do it. It's better for us not to do it. So this is the one that we were talking about, right? Let me just now get the volume and open interest, because I want to see if I'm doing this, if I'm the only one trading this, or there's a lot of activity. So 344 definitely has a lot of activity. Look, this is just the volume today that has been traded on it, on this 344. So when you're looking at this, I'm not the only one who has observed that the low of the day is 344.25. This is public information. Everybody can see it. And you know that this is where the put selling is being done. This put selling today overwhelms the put selling of all the previous days. So there's no way that somebody can say, oh, these are the bought puts that are closing these open 991 contracts. That's not the case, because this would completely wiped out that. So in the morning tomorrow, you'll probably see that this open interest is going to grow in whatever amount, because these are the opening positions. So having said that, how much money would we get on this $1 spread? Because it is a $1 between a 344 and 34. We're getting the 21 cents. So it's not as rich in a premium as our earlier example when we did on a SPY. Remember, on a SPY, we're getting the 23 cents. Oh, you're only talking about the 2 cents. Well, that 2 cents actually pays off for 2 of your commissions. But we already concluded that the chart doesn't support this, because our level here at the 344 is just not something that we're going to do, because we want to have a lower one. Now, I like what the mark says. Why don't you look at the different time frame and look at the different UFOs? So why don't we go 55 minutes? And where are the UFOs on the 55? Okay, so they're a little bit closer, but they're still out of the reach. So I still feel that either the QQQ or IWM are going to be way better candidates than what I have right now on my example of the diamond. So let me just refresh this and see what is happening. Okay, so now we're coming in the lunchtime in New York, and what usually happens is that you have a rally in the morning and then you have a little pause. So we're pausing here. So we are now in a session ever since 11 o'clock New York time. We haven't really missed much of the activity. Only NASDAQ has shown a little bit of strength here, because this is a really strong bar. So we really can slow down and not rush through this, because I want you to interact with me and to understand why I'm really skipping doing the diamonds, because I'm sure that looking at the QQQ and IWM, I can find a better candidate. So let's look at now 336 on a QQQ as my possible level where I want to place that bull put. 336. Okay, I like it. The only problem is that it's supposed to be below, and this is above it. This is above it, and it's already coming in UFO. And if it hits, it might come down. So let me just draw the line that I'm concerned about. If I now draw from here to here, oh, we already broken this line, obviously. So in that case, we're good. Okay, let me look at the IWM. I want to choose the better of the two. And as a reminder of IWM, which line in the sand did we pick? So this STO stands for sell to open 197. 197. And 197 would be right here in this area. Right in this area. So maybe I can alter this and say, never mind what I type in here, because I like to have a second choice. And on my second choice, and I hope this is going to make sense to you, because the chart is supporting me doing the 196, then of course my protection is going to be 195. So what am I talking about? When you look at right here, isn't the 196 way safer than other ones? So feel free to type in a checkbox that you're good. Now be aware if this is a 55-minute time frame. If I would change this into a different time frame, such as daily, the UFOs are not going to be visible till all the way down here, right? So if you're good with 196, 195, type in the chat box. I'm going to take a sip of water here. Then when I get that answer, then we can proceed with the next trade. So although I was planning to do the three more trades on ETFs, I'm going to now stick to doing IWM, but I want to make sure that I do it properly, and then I can go and explain something about risk management. So delete, type in IWM from the beginning to the end. Starting. Current price is right here. My low of the day is 197. I notice that 196, let me now move this and show it to where 196 is, has a lot of activity. 195 even has more activity, but that's because of the fact that it's a round number. So if I go now in the future and open some of these in the future, you're going to actually get surprised how always the round numbers have a more activity. So you see this one is 185, that's going to have activity, and then 190 is going to have activity, you see here. So 5-point increments always have a more activity than these singles or even the halves, because many times you actually have a halves. So over here you have a 187 and a half, and then over here you have a 187, and over here you have a 185. So when you look at over here, do you see how much greater activity you're seeing on these round numbers, 185 or a 190? I hope this is something that is poking your eyes and you're like, oh wow, so this is not necessarily a level or anything like that. It's just a functionality of the round numbers. It is just a functionality of the round numbers. That's all that it is. It's just a functionality of the round numbers. So we're sticking with the 196. This is the one that we are sticking with. So we're going to be doing the 196 and we're going to be buying the 195. So when I encircle this, these are the things that we're going to do. These are the things we're going to do. And I'm going to go in the top and do it on the top and save that particular trade for a future reference. We supposed to get approximately 11 cents for that one. Why do I say 11 cents? 55, 44. So we're buying at the ask, we're selling at the bid. So we're getting the 11 cents, but we are so safe. So safe meaning 2-1 minus 196, we're 5 points away. And today the market is up about 4 points. Okay, so are we following this? Good, Christian. I'm glad that you're agreeing with me, like that it passes a standard of the unfilled orders. It passes a standard of how far is that out of the money. And as I said, like for me, the guiding star is this fact that we're placing this additional $1.69 below the low. Okay, so I'm placing this in, selling it, changing the contract side to 1, and then showing you that I'm risking, in this case, $87 to make 13, but we are going to put the stop on, right? So let's now do this. So we get filled here in a moment. If they're going to give me that, supposed to be that they give me 11 cents, because didn't we calculate that 55 minus 44? But now I'm greedy. I'm asking actually for for 13 cents. And it's like, no, we can give you 12. Well, I usually wait 2 minutes. So because we have time, I'm going to just show you here what is going on here. So it's 45. Now it's already 46. I'm going to be altering this and just dropping it by a penny. So now when I drop this by a penny, naturally still 11, but the mid price, mathematically speaking, is 12. That doesn't mean they're going to take me. That does not mean they're going to take. Well, they took me. Okay, how much am I risking right now? 88. 88. So let's get rid of this one. Oh, now I got two of them. Now I have a $200. Now one got price improvement. Do you see that? So one of the diamonds has gotten the price improvement. Let's just type in DIA. And I'm going to just have a reset here. And you would see that I actually placed the 2 trades today on the diamonds. And those 2 trades are one for 13 cents, one for 12 cents. Okay, so what would I need to do next? I would need to place, I'm sorry, I said the diamond, but it's IWM. Please forgive me, I misspoke. So now I'm going over here, create a closing order. And I'm going to now bring this in so you can follow it, that I'm protecting my investment. So time in force is going to be God until cancel. Price rule, whatever the market is, if we are wrong. So if we are wrong and we go down, not at or above, but at or below 196, close me, take me out, because then I'm wrong. Then I'm wrong. So now I'm clicking one more time, and you're seeing right here, if the IWM is at or below 196, give me back some of my money that I have. And I'm doing this actually with the 2 contracts. You see over here, I'm having the 2 contracts. So now I'm sending it in. And when I send it in, you will see over here, my green position that is bought is going to be sold. And my sold position, 196, working order says buy. I would need to do the same thing on a SPX as well on a SPY, as well as on a SPY. So on a SPX, what was my line in the sand? Well, obviously on the SPX, I'm going to just point out to you, this is where my land in the sign is, right? 43.90. Okay, so what do we do now? We are managing this trade in such a way, and I'm going to do the one that the Mark suggested, but I did it with the 10 contracts to distinguish from the one that I did. So it has to quote something, and it quotes 80. That doesn't mean necessarily that's what we're going to get back, because we don't know where the price is going to be in the future. So the same steps are there. So time in force needs to be good till cancel. Limit needs to be market. SPX method, when we are less than, and the number that we said is 43.90. So if this goes to 43.90, get me out. Well, how about if I tell you, look at the strike price that you have? So on the Mark example, we actually picked the 43.80. So in that case, I can put 43.80, because at 43.90, I'm still not wrong. I'm only wrong when it goes to what? To 43.80. Now, on the Mark, we actually have a 43.70. On the Mark, we can actually put this thing to get me out when I'm completely wrong at 43.70. At 43.70. So this one is even greater protection than other one. Oops, I don't know why this didn't change. Let me just retype from the beginning to the end. 4370 is actually my unit that I have gone ahead and sold. So now when I have this, now I click save, confirm. I take a moment to read it. This is the one that we did. It says when we are at the 4370, okay? Send. It's not going to get filled. Why it's not going to get filled? The reason why it's not going to get filled, because SPX is sitting here at 44.52. 44.52. Okay? it would need to drop virtually those $52 plus another $30. That would be $82 would need to go down, which anything can happen, any crazy thing. So we have taken care of this one, but we did not take care of the one with the single unit. So the one with the single unit is 43.80. So what do we need to do now? So we're going to the 43.80 unit. We're single clicking. The next step is this wheel. Bring back so everybody can see visually what is taking place here. Time in force, good till cancel. Limit market, SPX, when we are at 43.80, confirm it, save, proofread it, 43.80, market, good till cancel, send. Last one is actually the very first one that we started with. So we have started with the SPY and we did the 438. That's the only one we didn't put risk management on. So we need to now go in the SPY, do the same thing, tuck it here. See, at one point, trading becomes just like a job, just like any other job. It's almost like boring, like now entering these things. Now you can do this after the market closes, or you can do it while the market is open. But just be aware of it that you need to follow the steps. It needs to be time in force, good till cancel. It can't have a limit order. It needs to be market order because we don't know where the price is going to be when a time comes. So we are now exiting this when the price drops to 43.80. So go ahead, send. Double check what the market is doing. It's still going sideways. It's still lunch in New York. Oh, actually, there's a little bit break to the upside. Imagine Dow is up 456 points. 456 points, right? S&P, when we looked at it, was up 55. Now it's up 63. So this is really like there's no worries. Everything is looking good. We're going to the moon. Okay. Questions about this before I discuss this trade that I put in my options with options. So this was a trade that did not work out. Okay, it was at the money trade. Okay, and it was a basic trade that was done in such a way that either this price action is going to close below the 337 or it's not. And obviously yesterday price action on the QQQ was very, very, very violent. And I know, Mark, you actually put here a question here that I had a chance to read it, but I said like maybe I can just address this with everybody who's attending here. And I think you have managed this quite well. And so like it said here that you got in, you placed the close price, you got out, and you actually made a little bit of money, but when you subtract the commission, you were still good, 948. I think you managed it perfectly because had you held it all the way till the end, yesterday the QQQ has closed at a level that was not 338, right? So that would be right here when I show it to you. So that would be complete loss if you waited till the end, right? Because on the close, it was a 338.69, and that trade would be profitable only if it closed below the 337. So now I want you to notice over here, did we open at 337.35? Did we even go as low as 335.79? So I think, Mark, like you need to give yourself a credit. You managed it quite well, although by the end of the day it turned out to be the losing trade. But yesterday was extremely volatile day. Just be aware of it that yesterday was one of those days that the bulls and bears were fighting very, very hard. And by the end of it, the bulls won, and now the bulls are pushing this market higher up. Bulls are really not surrendering. So what I want to do in this last few minutes, just like I took a snapshot of my very first trade, which was on a SPY, I would like to actually take a few more snapshots, and then if you want to ask a few questions that you still have that you're confused about, feel free to do that. So I'm going to just build this again with the option chain, and I'm going to wait for you. Yes, Christian, I am doing these kind of trades on an ongoing basis, but be aware of it that the move needs to be already strongly in place. This kind of approach on a yesterday sideways market would not necessarily work. Would not necessarily work. So what I want you to remember, Christian, needs to be a trending day, and today more than any other day, you need to be aware of it that it's really a trending day. Because take a look here. If you don't call this a trending day, then what is a trending day? Now, we can have a trending day up, we can have a trending day down, right? But in this case, I mean, everything is up. Look at Amazon, Tesla. Like all the sectors are up except energy and maybe a few of them here in the healthcare. So yes, answer to your question, yes. But by then, everything will need to be in place. So we have here multiple trades that I did. I think what I'm going to do, I'm going to just do this SPY because, in my opinion, the SPY was the first one that we started with, and it makes kind of sense that we end with that trade. And I'm going to just follow the simple way how we do this. We pull up the here bull put. When we go to edit the spread, we change this to the April. We selected April 22nd. I know we have a Wednesday option, but I selected April 22nd, right? We did the one contract. We selected the 437 to the downside. We selected 438 to the upside. And I have information here what I got filled, so I'm going to use that as information. So I have gotten filled for 437 for $1.42. Now it would be nice if I kept all of that, but the fact is that I couldn't keep all 142. I had to give them back something. And Christian, that's that thing, like that you're not really risking, you are now giving back. It's actually flip side. $1.65 is what I got, and $1.42 out of that $1.65 what I gave to them, and that actually gives me that 23 cents. So now I'm going to take a snapshot here, and when I put it in the Word document, I think the stuff is going to become way more clear. And if you need to rewatch this one or two times, that's completely fine with me, because be aware of it that when I priced this originally, it said it's a 24 cents. But that's not the reality because I got filled for what? For 23 cents. So now I'm having here exactly what I got filled. And I do have a piece of information here where the SPY was when we actually filled the straight. So what else do I need? Well, I need the risk graph. How do I get the risk graph? I place the mouse right here where it says the bull put spread, a single right click. I go to the risk graph. And for me, when I get the risk graph, my eyes instantly go in this section right here. Instantly. This is the first place that I'm going to. So when I take a snap of that, I know this is what you want to know. What's my bottom line with this whole thing? The bottom line is that I'm risking $77, but that's the cost of the investment because we already have a stop on it. And you know where we put the stop? My stop is exactly where that sold unit is. One time I did this, somebody said, oh, this is so cool. So over here it said the STO. If you add the word P, what does that spell? Stop. So your stop is basically at the place where you have your sold unit. So if you can kind of, Christian, remember that, it's kind of easy way to do it. Now, you really don't want it to go there and to get stopped out because that would be painful. But we need to have a stop there anyway. So let's now take a snapshot of this. I like to include the numbers so it just doesn't cut only the risk graph, but it shows me everything that I need. So as of now, you're seeing the distance between here and here is 77 cents. Distance between here and here is 23. So even if this goes to the moon, the most that I can make is a premium that I had taken in. So I have all these things in, and what I'm going to do here in a few moments, I'm going to post this trade. And one more time, thank you once again for attending. I look forward to seeing you at my next session, and I think that is going to be actually in May. So thank you once again. Stay hedged, and bye now.